Hi, I'm Jeff Hirsch. I'm here at the Money Show in Dallas with Jay Hatfield. He is the founder, CEO, and portfolio manager at Infrastructure Capital. They run a bunch of ETFs. Some are in the preferred stock area. So you have an interesting interest rate environment right now. What do you see, and how's that impacting your investments in preferreds?
Thanks, Jeff. So our view is that although we think interest rates may be towards the bottom of the range, or as low as 1.5%, we think that there's a cap, or in other words, that interest rates are range bound to some degree, because there's over 40 trillion of global pension assets, and those funds tend to rebalance when rates trade off. So they're really a deep bid for bonds if rates were to trade off. So
where do you see the interest rate, range that you're talking about there?
We think that 1.5% on the Treasury, which we hit, was
the 10-year.
Possibly on the 10-year, yeah, is probably maybe the low end rate.
And what's the upper end on that?
Maybe 2.25%, 2.5%, and that's where you'd see the pension funds come in and try to add to that.
And start buying more stuff. So right. You have an income strategy using preferreds, not just bonds. So tell us about the product, the ETF, and what kind of preferreds you have.
Well, I think preferred stocks are interesting in that the index average yield is right around 6%, so you get more spread, so you take less interest rate risk than you would like for investment grade bonds or muni bonds or treasuries directly. So even if rates trade, towards the top end of the range you were talking about, you might have a little bit of mark-to-market loss, but less than you would with pure treasuries. But yet you also get a decent yield, so you're getting that 6%, so it tends to move the needle more. So we think preferred stocks are an interesting investment.
So you're picking high yield preferreds.
Yeah, they're preferreds. Some of them are pre-investment grade. Most of them are the junior securities of investment grade issuers, but the preferreds might be double B,
right.
So non-investment grade. And then you get paid for that, so you get the 6%. You take
and
less.
Is there capital gains upside on that too?
There can be. I mean, a lot of the preferreds right now are trading above par. We tend to, particularly in our active fund, PFFA, we tend to focus on the ones that are trading below par. So there is upside, and then if to the extent that they do trade well above par, we'll sell those and look for more undervalued securities.
And what's your take on the housing market?
We actually think that because rates are low, well below 4% on the mortgage rates, the housing market's relatively stable, and that's bullish for a stable market, and that most recessions have been preceded by a housing market crash.
Right.
And often with rates very high, over 7% on the 10-year. So we actually think that housing is actually supportive of a stable, relatively stable.
You don't expect a recession?
No, we think we're more mid-cycle than late cycle because of the stable housing market.
Very cool. And where does everyone find out about your funds?
You can look at www.infracapfunds.com.
Infracapfunds.com. Thanks, Jay.
Nice to meet you.
Appreciate it.